There's a secret that rich people in Kenya don't tell you. They don't just work for money, they make money work for them. And one way to do that, the Nairobi Stock Exchange, NSE. Now, before you start thinking, hii NSE ni ya watu wa suti pekee, sisi tuna struggle na fare, let me tell you something. So, something shocking indeed. If you had bought Kenyan shillings worth 10k in Safaricom shares in 2008, today you'd be sitting on over 400k without doing anything, just chilling, eating your mtura, and watching your money grow. And that's just one example. Companies like Equity Bank, KCB, and EABL have turned ordinary Kenyans into silent millionaires. So today, I'll break down NSE in 7 simple steps, and by the end, you'll understand how to take a small piece of these giant businesses for yourself. And if you don't get it, my friend, wewe uko na kichwa ya mawe. Step 1. What is the NSE? Now, the NSE, the Nairobi Stock Exchange, is simply a market where people buy and sell shares of companies. It's like a Gikomba market. Instead of buying clothes, you're buying pieces of big businesses. Think of it this way. Imagine Equity Bank is a huge ugali. The owner, James Mwangi, decides wacha nikate vipande vidogo vidogo niuzie watu wengine. So he slices that ugali into thousands of pieces, and people like you and me can buy a small bite. If Equity Bank grows, your piece grows in value too. The company makes profits. They can even send you money. This is called a dividend. My friend, just imagine getting paid for doing nothing. Now don't be fooled. Just like in Gikomba market, not everything is valuable. Some shares are like mitumba trousers at 50 bob. You buy today, tomorrow they tear. That's why you must learn before you invest. Number 2, how do you make money? There are 2 main ways to make money in the stock market. The first is through dividends. This is when a company decides to share its profit with investors. It's like being in a chama where every end month the treasurer says, tumepata faida, kila mtu apokee kidogo. For example, Safaricom paid dividends of Kenya shillings 1.2 per share in 2023. If you had 10,000 shares, you would have received Kenya shillings 12,000 without lifting a finger. That's rent money, guys. And number 2 is through capital gains. This is when the value of your shares goes up and you sell them at a higher price. For example, in 2008, one Safaricom share cost Kenya shillings 5. Today, it's around 22 shillings. If you had invested like 100k back then, today you'll be sitting on over 440k, believe me or not. It's like buying a land in Kitengela for 100k and waiting for 5 years and selling it for 500k. The only difference, here no one disturbs you, like uko na title deed and all those things. Now, step 3, how to buy shares. Now you're thinking, sawa, nataka kununua shares, naenda wapi? To buy shares, you need 2 things. A CDS account. Think of this like an M-Pesa account but for shares. You open it through the banks or platforms like NSE, MyTrade, Easy Invest. That's for the Equity Bank. Or the SBG Securities, that's for Stanbic. Number 2, some money. You can start with as little as 500 shillings. That's the price of one meal in a restaurant at Nairobi. Yet this can make you rich. Once you have an account, you log in, search for the company you want, enter the number of shares you're buying, click buy, and boom, you're now a shareholder. My friend, just like that. You own a small part of Safaricom or KCB. Call them. They say niko na shares zenu, niongezee pesa limit. Step 4, understanding the market trends. The stock market is like Nairobi weather. Sometimes it's sunny, sometimes it rains until you start questioning your life. Until you start questioning your decisions. For example, During the COVID-19 pandemic, share prices crashed. KCB shares dropped from Kenya shillings 53 to 32 shillings. Some people panicked and sold, but those who bought at 32 made a huge profit when prices recovered. It's like when they say unga prices are dropping, some people rush into buying 10 bells, then a month later the price shoots up, and then they start selling at double the price. That's how smart investors think. They buy when everyone else is panicking and sell when everyone else is excited. Now, at step 5, we have the risk versus reward. Investing is like dating in Nairobi. If you want high risk, high reward, it's like dating a flashy, unpredictable partner who drives a BMW and tells you, "Trust me, babe, I have big plans." If you want a low risk, stable returns, it's like dating a calm, reliable person who doesn't want to excite you daily, but gives you peace of mind. For example, Kenyan is a slow, steady stock. It won't make you rich overnight, but it won't collapse either. On the other hand, small companies like Eva Ready or Uchumi, my friend, that's like falling for sweet words from a con artist. Choose wisely. Now, at number 6, we have long-term versus short-term investing. Look at Equity Bank. In 2006, the shares were going for 10 shillings. Today, one share is worth 45 bob. That is 4 times your money in less than 20 years. Think so? Yeah. Long-term investing is like planting a mango tree. You won't get fruit today, but in 5 years, you'll be the one selling mangoes while the others are struggling to buy. Number 7, how to start today. Here is how to start. Number 1, open a CDS account. Use banks or online platforms. At number 2, choose a company. It's very wise to research before you start investing. And number 3, invest more, learn, then grow. And remember, the best time to invest was yesterday. The second best time is today. Now, the conclusion is your move. Now, you understand that the NSE, you understand the NSE. What are you waiting for? Tell me in the comments. Have you ever invested in stocks? If you had 10k cash, which company would you invest in? Like, share, and subscribe for more financial wisdom in the Kenyan style. This one has been Alva Nigeria together with the Gerald Motion Pictures. Thank you for listening to us. Share and subscribe to Money Reset. Thank you. Sign out.